There's fascinating stories in real estate of people that have built empires purely from nothing, which I think is cool to hear, especially lots of people that immigrated here with nothing and built a massive business. And I think real estate it's a great way to do it. There's just a ton of opportunity really at any city to really do something and grow it.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Dave Codrea. Dave is the co-founder and partner of Greenleaf Capital Partners, leading the integration and growth of its investment and operational aspects. Dave, like I said, there's a whole bunch of interesting stuff here in your bio, but I always find it just so much more interesting to let you tell your story rather than me read it off a piece of paper. But first, thanks for coming on the show. Thanks for taking the time out. Really excited to talk today, so I appreciate it.
Yeah, thanks for having me. I love these kind of conversations and going through like what drives people and gets them motivated to do stuff. So
yeah, absolutely.
Good talk.
Well, let's start with your story. Your origin story, if you will. What got you to where you are today, and we'll go from there.
Yes, I grew up in the Northeast. We're talking a little bit shoveling snow growing up. It was always something I figured, it was always something I knew I don't want to do when I get older. So how can I not do that? That was one goal I remember having. And that brought me to Atlanta, where thankfully we don't really get any snow, maybe once every 10 years. So,
right.
But I love skiing. That's a different part of it. You can always fly to snow. You don't have to live in it. So
yes, yeah. Snow should be a choice.
Yes, exactly, definitely. Yeah. I was always passionate about like entrepreneurship growing up. My dad was an entrepreneur. I ran a family business for a long time, and I was always like, what can I do in that vein? I think as little kids, you're starting, at least where I grew up too, like you could always shovel snow for a little bit of extra money in the winter. Mm-hmm. You could go knock on your neighbor's doors, shovel snow, make some money. There's always opportunities to start little businesses. And I was always drawn to that throughout my life. And then I moved to Atlanta and I got into real estate really into high school, college, where I was like fascinated by how these businesses worked in real estate. And 2008, I was like, look, I got to start doing some of the stuff. I want to do it in Atlanta. So I dabbled with buying some stuff in the Northeast and working on that. But once that shift came, I moved to Atlanta, started buying assets down here and really building a business. That's when I got just really more into it and more passionate about like, how can I make this what my life is going to be long-term? How do I make this my career? The people I'm around all the time. There's fascinating stories in real estate of people that have built empires purely from nothing, which I think is cool to hear, especially lots of people that immigrated here with nothing and built a massive business. I think real estate it's a great way to do it. There's just a ton of opportunity really at any city you're in to really do something and grow it. So that was always very exciting for me. I saw that as the path, and knowing that if you're kind of willing to just put in a lot of hard work, you can really make it happen. So I started out doing maintenance, fixing things, building stuff. I love doing that out of the gates. And then maybe like 2014, 15, I realized I like doing things that are hard. I get enjoyment out of doing things the challenging way, doing projects that are difficult to get through, and really kind of made that part of my company, which is Greenleaf now. And we have some amazing team members now that have just done some really hard stuff. And it's awesome to be around other people that are doing that, tackling big challenges or doing things that are really hard, whether that's going back to school, at any point in time when you're 25 or 45, going back to school and getting a degree you didn't finish. Or we've got people that are climbing mountains. We have people that went through full citizenship when they joined here, which is an adventure on its own and super challenging and emotional.
Yeah.
So using real estate as a way to be around the people you want to be around. My company, I've got 60 people who all have gone through something and done something hard in their life and have pretty amazing stories of how we're on the same team now working for a mission together. So real estate's really been it's been a passion of mine that whole time. And it's everyone I know, it's really brought everyone together around that and enabled lots of people to do some pretty cool stuff.
Yeah. You were kind of in it at an early age, right? And we have, we have lots of people on the podcast that come from maybe a different career entirely. And then they're like, sort of maybe become an accidental landlord or something happens. They read Rich Dad, Poor Dad, whatever it is, some event happens and they're like, you know what, I should get into real estate. And they start to go from there. But I mean, you figured that out quite early. Was there some sort of spark or something like that planted that seed for you?
I mean, when I grew up, I was always like helping my dad with little projects around the house or doing stuff. My dad was an entrepreneur, ran a business, and I would go to his business either at night or on the weekends, and there's always something to do. If you own and run the business, there's always something you can go do. I just really enjoyed doing that. It was like, I remember being up on the roof, shoveling snow off the roof of a flat roof when I was a little kid. My dad's like, get up there and shovel that stuff off. I was like, I kind of enjoyed this. Real estate for me personally, like in my head, I can see progress being made, like in real life right now. I can see it.
Yep.
I can see how that wall looked messy when I started, and now it's painted and clean and it looks great. And I'm like, okay, that brought me personal satisfaction doing that. So I kind of learned that about myself and maybe in the high school years. So it was like, okay, this is a natural path that I can go down.
Yeah. Yeah. It really resonates with me because I had, sort of similar, I didn't exactly get there full time right away, but I had, kind of that similar, I don't know, like it's, I know that it's just visual, but it's like just the satisfaction of hard work and, like I had my own house I did work on, but I also like worked for contractors, and it was just always something that was like, it was pretty cool to see, like you said, like something bad, take it and make it something nice again, and make, if you're doing that for someone else, make them happy. Maybe you're doing it in your own house and you're like, oh, look what I just did. Look what I just accomplished. And it really does, as you said, like real estate really lends itself to just being able to work hard and affect an outcome, ultimately, which sounds simple, but it kind of is. It's not easy, but it is actually fairly simple if you boil it down to that.
Yes. Yeah. It's not, I mean, there are hard parts of it. There's things you're learning all the time, but just going out and buying an old building and refinishing the floors, it's like, wow, this is awesome. Like, I mean, there's tons of just YouTube shorts of people that take a floor and refinish it and it looks beautiful. I'm like, that is so cool.
Yeah.
I like that stuff. I think it's awesome. People are like, well, that's boring. Why are you looking at that? But like, that's really neat to me. So I think you're finding what you want to do in life. It's a lot easier if you find it at least entertaining yourself. And then you just got to convince some other people to find it entertaining as well and do it with you. So you don't need that many people. You just need a few.
Yeah. Well, and that, I mean, it sounds like, I think you said you had 60 people on your team at this point. So that's a pretty big team. Walk us through some of the evolution of that. So you're in Atlanta. It sounds like you started kind of on the single family side. Like, walk us through some of that over time. I think, I actually would say a team of 60 is a fairly large company at this point. So I assume you didn't start with that many, but kind of how is that?
No. Yeah.
How is that progression for you?
Well, I mean, one of the first projects we were doing was like an 11-unit apartment building that we were renovating. Me and I had two business partners at the time. We kind of either suckered each other into doing it, or we at least agreed we would attempt this.
Yeah.
And then we put our first budget together to renovate this property. There's no labor charge. We're not getting paid anything. We're like, let's just go do it. And we were sanding concrete floors that had glued down carpet on it. In the room, there's no ventilation. I'm like, we should probably have a mask on, I think. Right. But it's like, we had two guys that were helping us, all of our partners. and they quit. They're like, we're not doing this garbage. And I was like, man, we really need to find some people that want to do this with us. And my one partner, he's like, I don't think we're going to find anyone that wants to do this for no pay.
Right.
Well, it's like, well, we got 3 of us, so we can figure it out from there. But yeah, that was really, we started with how do we get some of this maintenance done, and finding other people that had some skills and were willing to try it out and do it. And, that evolved. I had one of our early investors, we were in student housing, and we did a bunch of, individual unit turns, because all the students move out one week and they move back in the next week. And my buddy Nick, I was like, hey, you should come. It'll be fun. You can see the whole process. But he didn't know that whole process meant he had to stay up and paint walls until 4 a.m. every day. And we were going to sleep all over the place. He's like, I'm never coming back to do this again. That was terrible. I was like, that was a lot of fun. Well, he's like, that was not fun at all. So sometimes you're like, people don't want to be doing this stuff. But we found people along the way that like doing all this stuff, and, probably more visual learners that like seeing the progress that we can make on places, and doing it with a fun group of people is always makes it easier.
Yeah.
But yeah,
completely agree. Completely agree.
Yeah, we've added people over the years as we've kind of expanded and gotten more assets, and but it's definitely like do they fit with how we do things? Mm-hmm. And if they do, it's normally great fun and it works really well.
Yeah. So what does your portfolio look like today? I mean, it sounds like it started somewhere around 2008, which obviously was a interesting time in the housing market, but what does it look like today? What's kind of your focus?
Yeah, we've done a bunch of different asset classes over the years. I mean, we've done student housing, single family, traditional apartments, mobile home communities, and we've got into medical assets, retail. Right now we're buying mostly single story office as kind of one of the asset classes we can tackle. And it's one where we can go in and we know what our exact buy box looks like, but it's also, there's a lot of stuff that's got to happen to go convert these things to be something usable. So it's like, what's a hard challenge that's out there in the market right now? That's definitely one of them. And it's one that we like. We love seeing the transformation of what's like dingy, dirty, kind of closed hallways to we open space up and turn it into really cool, usable, flex space. And it's exciting. The transformation is awesome to see. Even to this day, I still get excited about, like, it's really cool to see these things turn into something that someone's using. So that's what we're working on right now.
We got
a handful of asset classes that we have a portfolio of stuff in that we keep operating. We still own apartments. We're still operating all that stuff.
I guess what's the model there?
We're really, our model is just go find where we can make an impact in real estate. We're going to take something that is not being well utilized, and we're going to go do the legwork, do the hard decisions on what capital improvements need to be made. We're going to go in there, get our hands dirty, and turn it into something that's leasable and usable. So that's really been our model from day one. Has just been, where can we go in and put in some hard work, turn something around? The byproduct of that is the better you do, the more money you're going to make if you do that. But the input is really how much hard work you want to put in each one of these things.
Yeah. It sounds like it's less about the asset class, more about the value add strategy. Just, hey, we're going to take something currently not good and make it good.
And make good.
Yeah.
Yep. There's always something that's not working well.
Yeah.
Somewhere in whatever market you're in or whatever, there's always some building you drive by like, man, that thing, no one's been using that for 5 years. What's going on there?
Right.
It's like, go tackle that one. The harder it is, the less likely you got other people trying to do it. So, if you like doing that stuff, then it's a lot of fun and you're going to make some money doing it. But you also got to convince some other people to do it with you and be like, you think this is going to be fun? So,
you get. Yeah, it selects for a certain type of person for sure. To see that, you have to be able to either have a pretty strong vision, bring in people that have a pretty strong vision, or be able to relay your vision to them convincingly that this is going to work. Yeah. with these single story office assets, are you so you're buying them vacant? I'm
Yep.
imagining,
I mean,
or
mostly vacant, or, it's a weird market right now. I mean, there's stuff that has a lease, but they're not really there. Like they're going to
right.
leave at the end of it, or it's just really outdated and vacant. You can't lease anything there. Or sometimes there's actually still just some tenants there that are kind of chugging along, doing their thing. So normally there's like a little bit of occupancy,
Mm-hmm. Okay.
but yeah.
And you're
You
holding
definitely got to
them.
go figure out what the heck's going on.
Yeah. Do you hold those after, like, is the idea, sort of go in there, renovate, create value, and then hold those office buildings? You're selling them. What are you trying to, I guess, what's the exit strategy? Or maybe
Yeah,
there's
I mean, we're trying. If we feel like we can create good value and an opportunity and generate cash flow, then we're in a situation where we can hold it. But ultimately, if that trades at a better value and there's a better investment decision to sell it, we'll sell it at that time. But it's always like we buy a deal. It's kind of like we joke around, like if it's like buying a Honda Accord, you're going to have it for like 20 years. So it's going to work. Like you just got to be ready to now own this thing for a long time. So we look at buying a real estate deal saying, hey, we got to be able to hold it. It's got to generate cash flow. And if it does, you can hold stuff if they're well operated and in a good financial position for a long time. But if the market says, hey, this asset is now worth more and we can realize that value now, we'll sell it and go do it again. Kind of gets less exciting once you've owned something for a long time too. There's not as much.
Yeah.
Partly it's like we like doing that part. I want to go do, find the other hard thing to dig into. So if we've got a stable one, eventually we'll sell that one and go find another challenge to tackle. Oh.
Yeah. That's a really good point. And I think some of, maybe that's the crux of entrepreneurism in general, is it's like, it's really cool to, again, like take something broken and fix it, turn it around, have some very tangible result. And then it's kind of like, okay, do I hang on to it now that it's functioning so well, or do I pass that off to someone else who wants just that, sort of more passive, whether it's real estate, business, whatever it is, and go, just kind of keep following that plan of value add. And I think it's one of the things I love about real estate in general, entrepreneurism. Like, there's so many options. Just like there's something there for literally every person, depending on what their goals are and how, if you like yourself, like you like doing this stuff, you like, taking something, creating value. There's people that want to be passive, but believe in real estate. And so you partner with them and they become your investors and things. And it's just like, there's so much, it's so cool that within a space, there are so many options and opportunities. It's just, in like, I feel like I just keep finding out there are more of them, which can be tricky. You get a little bit of that shiny object syndrome, but it's,
oh yeah,
it's like, there really is something for everyone. I mean, and it's like, I think people outside of the space, outside of real estate, they kind of aren't involved, and they think, oh, I'd like to get involved in real estate. Like, they probably know one thing or two things. Like there's people that will think if you say you're in real estate, you're a realtor. That's the only thing they know as like being in real estate. It's just kind of, it's really a fascinating world to dive in and hear all the different opportunities that are available.
And it's just a wildly fragmented market. The diversity of just how many types of things are out there, and there's no one really at all that has any kind of scale compared to the size of the market. There's like Prologis on the commercial side. They're very, very large. But in the grand scheme of all the real estate out there, it's like, irrelevant. So there's so many different things that you can do in it, which is why I find it super exciting. And when I'm looking at like opportunities we really boil it down to like, what is it that we can actually be good at and do in right now? It's, we want 14 to 18 foot high, brick built, single story, 40 to 60,000 square foot rectangular buildings in the suburb. Like, we know exactly what the thing is that we can look for right now and tackle that problem. We can do that. But all the other, like, you could show me a single family house right now, like, I have no idea. I don't know what to do with that. And I was like, I couldn't like renovate that effectively or efficiently or have it look nice for the right it's like, I'm not going to do that. It's a totally different problem to learn how to tackle. But if you're good at it, you can make money at all these different areas, which is pretty cool.
Yeah. Yeah. And that's where that shiny object syndrome can become a little bit of a challenge, is you're like, oh, I'm going to do these office buildings. I'm going to do single family. I'm also going to do self-storage. Like, you can get a little bit outside of, kind of what your zone of expertise. Doesn't mean you can't learn the other things. And it doesn't mean that, there aren't common pathways, I guess, through different asset classes. But yeah, it's different to renovate a single family house than it is to, work in an office commercial type project. So yeah, it's really interesting just to hear. I mean, it's probably my favorite thing about this podcast is just like getting to hear what all the different guests are doing and like where their focus is, where you found your niche, like what you're able to do in like within that broad category of real estate. What do you, so, you've been in a lot of different asset classes. We've had, you kind of got your start at an interesting time in the market. It's also a pretty interesting time in the market now. So I'm always fascinated to hear what people think, maybe in comparison to what happened in 2008 to kind of what you're experiencing now in the real estate world. And you just sort of described a specific asset class that works for you right now, but maybe give us a little bit of your take on some of the differences or similarities between, sort of the Great Recession versus kind of what we're dealing with now.
Yeah, back in 2008, 2012, transaction volume was way down. And real estate wasn't like exciting or sexy. People are like, why would you want to buy that garbage? Right? That was a lot of like what kind of the thinking was then. And then banks were not super eager to lend on anything because they're like, I don't think this actually works. That was a lot of like the thought process of what was happening at that time. And then, in the past, really like call it 2 to 8 years, like lots of syndication, lots of excitement, the ability to kind of buy a deal and just sell it to the next person as the next, like, they're going to add some more lipstick to this thing and it's going to be great. And then now we're back into a phase of the market where operations are critical. Transaction volume has, for the most part, and we're seeing, has slowed tremendously on volumes of deals trading. And banks are back to the same point of like, we don't know if that's going to work. So a lot of from the, people are in a much better financial overall position now than most companies and stuff were 2008 to 2012. But a lot of the same stuff of like, you might have to hold something for longer than you expected. There's not, your next lending option is not going to be a cash out refi, right? That's not going to happen. And there's not going to be 50 people on the other side of the deal waiting to buy it. Like all that stuff is the market now is vastly different than 2 years ago. So reminds me a lot of what it was a little over 10 years ago, where if you're buying something, you better be ready to operate this thing and you better be ready to stick with it because it's not going to exit your books quickly by any means. We're even seeing contracts, 2021, 2022 contracts were super aggressive on, 15-day due diligence will close in 30. And now it's like, you better be getting ready for like 120-day contract time frame to make something happen. So it's wildly different than just 2 years ago, but it reminds me a lot of 12 years ago where the market is it's a lot thicker to try and get through what's happening right now.
Yeah. I think the point you made about you've got to be willing to hold on is it's funny how it seems like these cycles come and people lose that foresight, that thought process where it's like, you got to be ready to hold on. I mean, a lot of it has to do with lending, and 2008. So a lot of the trouble was these mortgages that essentially like you could leverage nearly 100%, and they would give it to anybody, and all of this stuff, and that drove up prices, among other things. But and we saw, I guess, similar thing in the commercial real estate space where it was like everybody was doing bridge debt, rates were low. It was like, kind of free money. We were leveraging very high. If you wanted to do deals, that was kind of your only option. It wasn't like, oh, I'm going to stick to my guns. It's like you either just do nothing or you're continuing to do this. Yeah. And I think that's like such a good learning lesson that I mean, something that I've already, become very hyper aware of is any future deals. It's like, you got to look at this like, do not be in a position of a forced exit. No matter what you do, however you structure things, how the big thing is, do not be in a position of a forced exit. And in that case, you're going to kind of rise to the top and float when things get bad. And so I think that's, I mean, who knows how long we're going to stay in what we're in an uncertain market right now. Like who knows how long it's going to stay that way. But still, like, if you don't have to exit right now, history says eventually that real estate will be worth more than it is now. Like, and it's just a time game. I would, yeah. At least that's sort of my perspective at this point.
Yeah, and the best time to buy stuff is when the market is hard, or when it's down, yeah, or when there's challenges, yeah, or when there's, pick any of the issue you can find. It's like, historically, that's normally done better when you've bought stuff when things aren't the coolest out there. They become cooler, yeah, longer term when they're worth more, right? But yeah, being able to buy stuff when things aren't going well is that's kind of like, that's where the excitement in real estate is, where you got to go find like, what's something that's not working well. Let's go there and find it. Mm-hmm. Figure out what we can do to make it work well. So, but a lot right now too in this market, it's like operations are critical to, real estate it's passive in some sense, but in another sense, it's like there is something every single day, every hour that you got to be working on and doing to maintain the building, to maintain the asset, to keep residents or commercial tenants happy with how it's performing. Like, you got to be on it. You really got to care. You can't fake it. They're going to see right through that. If you're just faking it out there, like, whatever, like, no, they're going to see right through that. No.
Yeah. It's not, I don't think it's passive at all, unless you're a passive investor. I think you're either an active investor and you're the one like sort of owning and operating, or you're a passive investor and you're trusting someone else to do that. Like, I think that to think that any real estate you own and you are to be the operator it's not going to be passive. Like, there's just there's going to be stuff that comes up. It's just not possible to do it that way. You said the time we're in now feels a lot like 2008 to 2012. I would say, a note to listeners, a lot of people who did buy things between 2008 and 2012 are extremely wealthy right now. So when you say that it's, this is the right time to buy, that's the reason. Like, this is a repeatable thing that when you see distress and you can get in there, that's it. Like, you still got to look at it like, I might have to hold this for a decade. That might actually be how long it takes to be, make it a worthwhile investment. But okay, like, if you told someone, hey, I'm gonna, your $100,000 is gonna be $1 million in 10 years, like, you should do that. Like, that's that's okay. Like, I think it's just understanding the time frames involved. And we had a few years there where it was like people were having, crazy outsized returns in 18 months, in 2 years, and be nice if that was how it always is, but it can't be that way always. Like, it's not impossible for it to just continually go up forever. in that type of time frame. So it's just
the kind of 2020 to 2022 returns where something was bought really quickly and flipped really quick. It's like that was an anomaly of time, and if you're able to take advantage of that time in that time frame, it's like great. Those are some wins. You did very well, but some of those, like you got stuck holding stuff from then. It's like it's probably not going to be great if you are hoping on a 6-month flip and you're in a 5-year hold with it.
Right. Yeah. It's short-term transactional real estate is very market dependent. Long-term value add, like operational excellence, you start to separate yourself from the market a little bit by a willingness to ride it out through, kind of up and down. I think that's really the key strategy.
There's a little more of choosing your own destiny. If you're willing to be the one doing the hard work and getting in there and being the operator and making it happen, like you have a lot more control of how things are. You don't have all control, but you got a lot more control of what your outcome is going to look like.
Yeah.
But it's going to be dirty. It's going to be messy. You got to get in there. There's no avoiding it.
Yeah.
It's like
sure.
Every time it rains, I'm like, oh crap, we're going to have to go tomorrow because we're going to have to fix something. Like,
yeah. Some storm, some, and then those are the ones are coming, and then it's like, oh, someone set their kitchen on fire. Like they're just things that happen that are part of being, the operator, the real estate owner. So it becomes just a almost like I don't know, second nature.
People ask sometimes, they're like,
problems.
What are you worried about? And I'm like, well, heck, sometimes if it's windy outside, I'm worried. I'm like, man, something's going to fall on something. That's terrifying. Right. It's like, it's emergency. You got to fix it. It's like, if it's raining and then water's coming in, if it gets too hot, ACs are breaking. If it gets too cold, I'm like, all those things. Constantly.
Yeah. Yeah. There's always something. It's a really, really interesting world. And as you said, great. If you're willing to put in the work, you can do great. So that's really what it's all about. Well, Dave, let me switch gears. I want to make sure I ask you the questions I ask every guest. And the first one is just tied to the name of the show being Know Your Why. So you've had a lot of success, over this last decade plus, but you're still doing it. Kind of what's your why? What's driving you at this point?
It's people that I'm around. I like doing hard things and people that I'm friends with. I do lots of, whether it's marathons or adventure races or travel, it's all around like kind of pushing it to harder things. Mm-hmm. And I've got a group of people I work with now that are live that on a daily basis. We're doing hard, challenging things at work, and their personal life. They're also doing things that are not the easy way to do it. They're not like going home and checking out for the rest of the day. They're all doing really hard stuff, which I think is awesome to hear, awesome to see. I want to support that. Our corporate, employment strategy encourages that. So it's like we've got, one of the women on my team is going out to climb the highest point of New York later this week. It's like, that's not something easy. She's got to fly up there. She's got to drive out there. It's like a 20-mile hike. And she's going to come back and then get rest and come back to work. It's like, that's not like easy by any means. Yep. So, but when you hear like, hey, what are you doing this weekend? It's like, that's inspiring. That's awesome. I want to be around people that are doing stuff like that. And we can do that at a real estate company. We can do that because there are cool, hard things we can work on. People that work here can go do challenging, fun stuff. And then even our passive investors are out doing big things in their lives that are exciting to see. We've got one of our investors who, he's early in retirement. He actually sold a bunch of real estate assets and did really well. And now he formed a nonprofit. He's in Africa 2 months out of the year, setting up schools and stuff, sending us back all the, work that he's doing over there. I was like, this is really cool to see. That's not easy. He could just be sitting at home watching movies or hanging out playing golf at a country club. No problem. Right. But he's choosing that path, which is exciting and inspiring for people in my organization too, of like, look what we can do if we're around people that are willing to do hard things together. So to me, That's what it's about. That's why it's exciting, because this real estate environment gives me the opportunity to see both sides and work with those people all the time.
Yeah, no, that's great. I think it sounds like the team, the culture that you've built within your company is very, very strong, and in alignment, which is just, it is.
We spend a lot of time together. It's like,
yeah.
You spend this much time with someone, you either better like what you're doing and at least like the people you're doing it with, or find something else to do, because there's not that much time in life. One of my buddies says, like, it's not your practice life. You don't get to like a redo at the, we're not, this is it. So that's
powerful. That's powerful.
You got to like who you're doing this stuff with.
Yeah. Oh, wow. Very cool. Well, when people hear this and they want to connect, what's the best way for them to reach out to you?
I mean, all my info is up on LinkedIn. That's really the best way, whether it's doing some kind of crazy hard adventure race or talking about real estate. Love to connect. And my phone number, email are up there too. So.
Okay. Yeah, we'll have all that in the show notes for people to find you. Dave, this has been a phenomenal conversation. I appreciate you being here. I appreciate the time you took out today. I think it's that idea of doing hard things create success. It really resonates with me, and I think people are going to get a lot out of this. So thanks for being here.
Yeah, enjoyed it, Jason. Thank you very much.
Yeah, absolutely. Folks listening, make sure you connect with Dave. We'll have all of his information in the show notes. Please like, rate, and review the show so we continue to get great guests. And as always, thank you for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?